The digital currency world was jolted on May 22, 2025, by news of a significant security breach. Cetus Protocol, known as the largest decentralized exchange operating on the Sui network, found itself the unfortunate target of a sophisticated cyber attack. The attackers managed to siphon off user funds amounting to a staggering $223 million, although some initial reports even cited a higher figure, closer to $260 million. This incident immediately sent ripples of concern throughout the Sui ecosystem and the broader DeFi community, highlighting the persistent vulnerabilities that can plague even prominent platforms. The sheer scale of the exploit underscored the immense financial risks involved in the rapidly evolving landscape of decentralized finance, making everyone sit up and take notice. The method behind this audacious hack involved the exploitation of critical vulnerabilities within a third-party math library that Cetus Protocol relied upon for its operations. More specifically, the attackers cleverly manipulated a flaw in the most significant bits check related to the liquidity parameters used by Cetus's automated market maker. This allowed them to add what appeared to be massive liquidity positions using spoof tokens, such as one named Bula, with minimal actual token input. By doing so, they could distort the price curves and internal calculations of the liquidity pools, effectively tricking the system and enabling them to drain real valuable assets from the protocol, a classic example of smart contract vulnerability. In the immediate aftermath of the breach, the response from the Sui network validators and its various ecosystem partners was notably swift. Recognizing the urgency of the situation, they moved quickly to mitigate further losses. On the very same day the hack occurred, May 22, 2025, a coordinated effort resulted in the freezing of approximately $163 million of the stolen assets. This decisive action, while aimed at protecting user funds, also sparked considerable debate within the community regarding the principles of decentralization, a topic that often comes to the fore when such interventions occur. The ability to freeze funds demonstrated a level of control that some found comforting, while others viewed it with unease. Cetus Protocol itself wasted no time in taking countermeasures to secure its platform and address the crisis. The protocol's team promptly paused its smart contracts to prevent any further exploitation, and to allow for a thorough investigation into the security failure. Alongside these immediate technical responses, Cetus announced a substantial bounty, initially reported as $5 million and later as $6 million by some sources, for any information that could lead to the successful identification and subsequent arrest of the individuals or group responsible for the attack. This move signaled their determination to bring the perpetrators to justice and recover the pilfered funds, offering a significant incentive for white-hat hackers or investigators to assist in their efforts. The repercussions of the Cetus Protocol hack were felt almost instantaneously in the market performance of SUI, the native token of the Sui network. Investor confidence, understandably shaken by the news of such a large-scale exploit on its leading DEX, took a significant hit. On May 22, 2025, the day the hack was publicized, the price of SUI registered a noticeable dip, trading at around $3.46, which represented a decline of over 4%. By May 27, 2025, while the price had slightly stabilized to approximately $3.48, it still reflected the negative sentiment and the lingering uncertainty surrounding the network's security and the future of the affected protocol, showcasing the market's sensitivity to security incidents. Beyond the immediate price drop of the SUI token, other market indicators also painted a concerning picture for the Sui ecosystem. The trading volume for SUI experienced a sharp decrease, plummeting by over 40% in the days following the incident. This reduction in trading activity suggested that many investors and traders were adopting a cautious wait-and-see approach, preferring to stay on the sidelines until there was greater clarity regarding the fallout from the hack and the measures being taken to prevent future occurrences. Furthermore, Sui's total value locked, a key metric representing the total amount of assets staked or locked within its DeFi protocols, saw a dramatic fall from $2.1 billion on May 22 to $1.5 billion shortly after the attack became public knowledge. The negative market impact was not confined solely to the SUI token. The Cetus token, native to the compromised protocol, suffered an even more severe blow, its value nosediving by 40% within hours of the hack's announcement. This drastic decline reflected the direct impact on the protocol's perceived viability and trustworthiness. Moreover, several Sui-based memecoins, including Bulla and Mojo, experienced catastrophic drops of over 90%, illustrating the heightened volatility and risk associated with less established assets within an ecosystem under stress. Meanwhile, the attacker's wallet, identified as 0xe28b50, was observed holding over 12.9 million SUI, worth around $54 million, shortly after the hack, with reports indicating that a portion of the stolen funds, approximately $63 million, was being moved to the Ethereum network for laundering. In response to this damaging security event, the Sui Foundation moved to bolster confidence and strengthen the network's defenses. On May 26, 2025, the Foundation announced a significant $10 million investment specifically earmarked for enhancing network security. This comprehensive initiative is set to focus on several key areas, including conducting more rigorous smart contract audits across the ecosystem, expanding bug bounty programs to incentivize the discovery of vulnerabilities, and developing better tooling for developers. The plan also involves closer collaboration with developers building on Sui to reinforce the security of their decentralized applications, aiming for a shared responsibility model for ecosystem security. The decisive action taken by Sui network validators and ecosystem partners to freeze a substantial portion of the stolen assets, while lauded by many for potentially safeguarding user funds, also ignited a fervent debate within the cryptocurrency community. A significant point of contention revolved around the core principles of decentralization. Critics argued that the ability of a centralized group of validators to freeze assets, regardless of the noble intent, undermined the very essence of a decentralized network. Such actions, they contended, made the Sui network appear more akin to a traditional, centralized financial system or a permissioned database, where a central authority retains ultimate control over transactions and accounts, a stark contrast to the censorship-resistant ideals often championed by blockchain proponents. This debate over the fund freeze brought to the surface fundamental questions about governance and the immutability of blockchain networks. Some observers drew parallels to the historic Ethereum DAO hack in 2016, which led to a contentious hard fork and the creation of Ethereum Classic. The proposal for an on-chain vote within the Sui community to decide on the return of the frozen assets further fueled discussions about who holds the power in such situations and whether intervention, even to correct a blatant theft, sets a dangerous precedent. The incident served as a critical reminder that the practical application of decentralization principles can become incredibly complex, especially when faced with significant financial losses and the demand for swift justice or recovery from affected users. Amidst the turmoil caused by the hack and the ensuing discussions, a noteworthy development emerged that offered a different perspective on Sui's trajectory. Earlier in the year, on March 17, 2025, Canary Capital, an investment firm, had filed an application with the U.S. Securities and Exchange Commission. Their purpose was to launch the first-ever exchange-traded fund that would track the spot price of Sui. This move signaled a growing institutional interest in SUI, suggesting that despite the inherent risks in the crypto space, some traditional financial players were seeing long-term potential in the network and its underlying technology. The filing was a significant step towards making SUI more accessible to a broader range of investors. The proposed Sui ETF by Canary Capital was not an isolated move but part of a broader strategic push by the firm to expand its cryptocurrency investment offerings. Canary Capital had also submitted similar filings for ETFs tracking other prominent cryptocurrencies, such as Solana and XRP. The intention behind these ETF products is to provide investors with a regulated and convenient way to gain exposure to these digital assets, without directly owning or managing the cryptocurrencies themselves. Such regulated investment vehicles are often seen as a bridge between traditional finance and the crypto world, potentially attracting more conservative capital and thereby contributing to the maturation and wider adoption of the underlying blockchain networks, even in the shadow of security setbacks. Following the Cetus Protocol hack and the immediate market turbulence, attention naturally turned towards SUI's future price prospects. Various cryptocurrency analysts and forecasting platforms began to weigh in with their predictions for 2025. For instance, Changelly's technical analysis as of late May 2025 suggested a potential short-term decrease of approximately 21% for SUI's price by May 28, 2025, reflecting the bearish sentiment immediately following the incident. On the other hand, CoinCodex offered a slightly different outlook, estimating that SUI could trade within a range of $2.39 to $2.65 in August 2025. These varied short-term predictions highlight the inherent volatility and the many factors influencing crypto valuations. Other analysts provided a broader range for SUI's potential price movement throughout 2025. Investing Haven, for example, forecasted that SUI's price could fluctuate between $2.21 and $6.90 during the year. They also presented a more bullish target of $8.98, contingent on favorable market conditions prevailing, and the network successfully navigating the aftermath of the security breach. CoinStats, another platform offering market analysis, projected a potential high of $7.01 for SUI in 2025, assuming that broader bullish trends in the cryptocurrency market would continue, and that Sui could effectively demonstrate enhanced security and regain investor trust. These projections indicate a wide spectrum of possibilities, heavily dependent on both internal recovery efforts and external market dynamics. Looking beyond the immediate year, long-term price predictions for SUI extending to 2026 and even 2030 paint a more optimistic picture, suggesting significant growth potential if the network can overcome its current challenges and continue to develop. CoinStats, for instance, projected that SUI could reach a price as high as $23.77 by the year 2030. Similarly, Investing Haven foresaw a peak price of $14.40 for SUI by 2030, basing this outlook on the assumption of sustained technological advancements within the Sui ecosystem and increasing market adoption of its platform and services over the coming years. Such long-range forecasts, while speculative, reflect a belief in the underlying value proposition of the Sui network. Ultimately, the $223 million hack of Cetus Protocol serves as a stark and costly reminder of the persistent security vulnerabilities that can exist within the decentralized finance space. The incident has forced the Sui network and its community to confront difficult questions regarding the balance between swift, decisive action to protect user assets and the unwavering commitment to decentralization principles. The measures taken, including the fund freeze and the subsequent $10 million security initiative, will be crucial in shaping perceptions and the network's resilience. How Sui navigates this recovery, addresses governance concerns, and implements enhanced security protocols will undoubtedly influence not only its own future market performance, but also contribute to the evolving best practices for security and crisis management across the entire cryptocurrency industry.